So Bones and I were talking about health insurance and just how confusing it is. It doesn't matter what income level you are, what educational level you are, it is confusing to just about everybody. Well, we're going to clear that up for you today in Health Insurance 101. What exactly is health insurance? If I ask you that question, a lot of you are probably thinking in your head right now that it's something overpriced and that you don't want to pay for it. But what if I told you the number one reason for bankruptcy in the United States is for medical costs and high medical bills? Then maybe you might pay attention a little bit more. So health insurance actually will help protect you from some of those costs. So if you're injured, if you are needing to go see a provider and maybe some high cost drugs, insurance will actually step in and help buffer those costs. So just as you think about car insurance, and car insurance will help protect you if you're in a fender bender, if you're in a car wreck, they will help step in and cover those costs. That's exactly what health insurance does. All right, let's talk terms, because there are a ton of terms, and that makes health insurance even that more confusing. When you talk about what is PPO, what is HMO, what is POS? Not that POS. What is HD? Because it's definitely not a high def cable. So let's start out with two terms that are really important and fundamental for us to understand with health insurance. And that is in-network and out-of-network. When I talk about in-network, when you think about if you're a member of a Costco or a Sam's, it's a similar concept. Insurance companies have gone out there and they have negotiated better rates for provider office visits, prescriptions, and hospital visits. When you have something that's out of network, that is not at that negotiated rate. So you will be paying a higher cost for something that's out of network. Now, why in the world would you want to go to something out of network? Well, because maybe there is a provider or a prescription that you want that is not at that negotiated rate. But it doesn't mean that you can't have it. It just means that maybe you'll have to pay out of pocket or a higher cost. So think about maybe a couple products that you like that come to mind right now. And you think about your favorite stores. And you go to Costco and you don't find it there. But maybe you go to Target or you go to Walmart and you find that product there. That is now going to an out-of-network cost. Maybe you're going to pay a little bit higher rate for it. So that is what those two buckets mean. Really important as we start moving forward in the conversation about health insurance. All right, are you ready for some more terms? The first one we're going to start with is premium. A premium is your monthly out-of-pocket cost. Think about this as something that you pay to keep your health insurance active. So just as you pay a monthly cost for your Netflix account, for your HBO Max, for your car insurance, that is what that premium cost is. The next number you're going to see is a deductible. Do not let this word scare you. This simply means that this is the amount of money out of pocket that you will have to pay before your health insurance kicks in. Now, what makes up a deductible? That can be lab work, it can be prescription medications, it can be radiology appointments. So when you see plans, you're going to see high deductible plans and you're going to see low deductible plans. Typically, if you have a high deductible plan, you're going to have a lower monthly premium versus if you have a low deductible plan, you will typically have a higher premium. So why is this so important? Because oftentimes people will think that they want to pay lower month over month for their insurance, but they actually are going to be paying more out of pocket if they are going to start going to the physician for a lot of visits. Now, say for example that your deductible is $1,000. You are going to have to come up with $1,000 throughout the year on top of your monthly premium before your insurance kicks in. The next two terms we're going to talk about are copay and coinsurance. Your copay is simply the dollar amount that you pay every time you go to see a provider, Maybe you get your prescription medications, or you can also have copays for ER visits. Now, your copays typically do not count toward your deductible. The next term is your coinsurance. Now, just as a copay is a dollar amount, your coinsurance is usually seen as a percentage. Now, your coinsurance, stay with me on this one. This kicks in after you meet your deductible, okay? So, and you will see this in a percentage usually as an 80-20 or 60-40. What this means is your insurance is going to pay 80% of cost and you will pay 20%. Plans and brands, brands and plans. Everybody knows what a brand is, right? In fact, one of Bones' favorite brands is Coke or a Diet Coke. Amazon, Target, Walmart, those are all big brands. When you think about health insurance, those brands are Aetna, Humana, Blue Cross Blue Shield. A lot of times what will happen is under Blue Cross Blue Shield, you will have Blue Cross Blue Shield with a state listed after it. Texas, California, Michigan, the list goes on. People are often wondering, does this mean I'm only covered in that state? No. What that typically means is that this is where you live, or that is where the plan was generated for you. Now, let's go into this next part about plans. And this can be really tricky, so I want you to hang in there with me, all right? The first plan we're going to talk about is HMO. One of the first terms we learned was in-network. Well, HMOs, they are all about being a network. HMOs have created a network of providers with contracted rates, and they've been set up with hospitals, providers, and pharmacies. And by setting up these rates, it keeps the cost down for you, the consumer. Within an HMO, you will have a PCP, which is a primary care provider. Your PCP can be a physician, nurse practitioner, physician assistant, or clinical nurse specialist. Think about your PCP as a flight navigator, someone who is coordinating care for you and getting you where you safely need to be. One thing specific with the HMO is you cannot see a specialist without a referral from your PCP. Within an HMO, you will only be able to see in-network providers. Anyone out of network is not covered. Next up is PPO. I like to call this the People's Choice Insurance. Remember how HMOs are only in-network? Well, PPOs, they like to party and go in and out of network. Instead of contracted providers and networks like a HMO, PPOs have what's called preferred providers. With a PPO, you have greater flexibility if you need to see someone not in network. However, most likely it will be at a higher rate. In a PPO plan, you do not have to have a designated PCP. However, it's always a good idea to have one. One of the greatest flexibilities of a PPO plan is if you need to see a specialist, a PCP does not need to make the referral. Just call the office of the provider you would like to go to, ensure they take your insurance, and schedule an appointment. Since you have more flexibility to receive care outside of your network, typically monthly premiums are higher with PPOs. Now let's look at a POS plan. This is not a very common plan at all, and it basically is a combination of an HMO and a PPO. With a POS, just like in an HMO, you will have a designated PCP who coordinates your care and provides referrals if you need a specialist. With the POS, you have more flexibility, similar to a PPO, with the ability to see out-of-network providers. While the price may be lower than a PPO, you will still have to pay a higher rate than you would if you had an HMO. The next plan up is high deductible health plan, and this is exactly as it sounds. You will have a high deductible and low monthly premiums. The risk with a high deductible plan is you will have much higher out-of-pocket costs. One way to offset this is the chance to participate in a health savings account. A health savings account is a brilliant way to offset costs with a high deductible plan. This is an account you can create through your work, your bank, or even through a brokerage account. Using pre-tax dollars, you set aside an amount of money determined by you, and if you don't use it throughout the year, it will roll over year. Usually with an HSA, you're provided with a debit card to pay for your expenses. One of the most common questions people ask is, how do I know which plan is right for me? In our video, How to Pick Health Insurance, we will go into more detail with this, but for now, some of the questions important to ask depend on what kind of healthcare needs you have now and what you think you may need in the future. I know that was a ton of information and your head is probably spinning. Listed below in the notes are links to additional helpful sites and information. Our goal is for you to always walk away with more tools in your toolbox. Thank you so much for watching today. Health literacy is our passion. We want to make sure that we are answering your questions, so please leave comments below, send ideas of videos that you want, follow us on our social media, which is listed below, and don't forget to subscribe. I'm Debbie Jennings, this is Bones, we are doing well, and we'll see you next time, my friends.